If you go back to the regulations of 1983, which appointed the People's Bank of China with full responsibility for managing China's gold and silver acquisition program, dealings, whatever you like to call it, then we've concentrated on gold, but we forget that this also covered silver. There is no doubt in my mind that there was a second program at the People's Bank of China to acquire silver reserves, if you like. My feeling is that the days of that suppression have probably come to an end, and I would expect, therefore, to see the silver price be freed, if you like, from this sort of suppressive intervention.
There has been a lot of speculation about the manipulation and suppression of silver prices. Over the years, as the gold-silver ratio continued to climb higher than historical values, analysts have argued that governments, particularly the US government, banks like JPMorgan and HSBC, large hedge funds, and even precious metals exchanges like COMEX have an interest in suppressing silver prices primarily to maintain the dominance of the dollar and lower the cost of production of missiles, torpedoes, and other things that require silver. In a recent interview with Liberty and Finance, Alasdair Macleod, a seasoned economist and head of research at GoldMoney, reveals an even deeper aspect of this manipulation and suggests that we are approaching the very end of this suppression. Macleod posits that China has strategically manipulated silver prices to amass significant reserves, mirroring its approach to gold accumulation. In the 1980s, China began a concerted effort to acquire precious metals, including silver. Macleod suggests that during this period, China leveraged its position as a major refiner and miner of silver. This strategy involved suppressing silver prices to facilitate accumulation without triggering market alarms. By maintaining low prices, China could purchase large quantities of silver discreetly, enhancing its strategic reserves. However, recent analyses by Macleod indicate a shift in China's approach. He asserts that China's long-term manipulation of silver prices has concluded. This change is attributed to several factors. To begin with, he believes that after decades of accumulation, China has likely reached its target for silver reserves, reducing the necessity for continued price suppression. The global silver market has also evolved, with increasing demand from industries such as photovoltaics and electronics. This heightened demand makes sustained price suppression more challenging and less practical. With the removal of artificial suppression, silver prices are expected to adjust upward, reflecting true market demand and supply dynamics. We will present clips from Macleod's interview. But before we do, please take a little time to like this video, subscribe to the channel, and turn on the notifications bell to receive instant alerts whenever we upload a video. We appreciate the support and hope you enjoy the video.
Well, it's a fascinating story. Here as you rightly point out, the silver price is extremely low. The gold to silver ratio, or is it the silver to gold ratio, is over 90. This is really crazy. I mean, the good news in this is that if you go back to the regulations of 1983, which appointed the People's Bank of China with full responsibility for managing China's gold and silver acquisition program, dealings, whatever you like to call it, then we've concentrated on gold, but we forget that this also covered silver. And we also forget that as recently as 1935, China was on a silver standard, not a gold standard. Banks held silver as, in reserve against what their customers might sort of decide to encash banknotes for. Individuals stored silver. So, that's only 90 years ago. That's sort of just in living memory for some of the really older Chinese. It's clear to me that China used the enormous bear market in gold between 1983 and 2002 to acquire a basic holding in gold. And I did some sums in terms of exchange flows capital flows in, export flows out, and so on and so forth, and came to the conclusion that at contemporary prices, the PBOC could easily have acquired as much as 20,000 tons. It was at that point that the PBOC set up the Shanghai Gold Exchange, which is controlled by the PBOC, incidentally, so it's within the mandate of that original legislation in 1983, and allowed Chinese citizens for themselves to acquire gold. Now, when it came to silver, it's a different situation. You didn't have a clearly a clear bear market, if you like, in the way we had in gold. Silver even then was behaving somewhat differently from gold as a monetary metal. There is no doubt in my mind that there was a second program at the People's Bank of China to acquire silver reserves, if you like, which would be, like the gold reserves spread around the People's Liberation Army, the Communist Youth Wing Party, and so on and so forth. I mean, there are various government accounts where all this stuff was concealed. And I thought I'd have a look at this and try and work out where all the silver was going and what was actually happening. And at this conference, there were a number of silver producers and exploration companies with stalls. And I asked the management on all these stalls, how did they turn their silver into cash? Because, if you're managing a mine, you're not necessarily interested in what's coming out. You're interested in what it sells for, because you've got to pay wages and you've got to pay fuel bills and all the rest of it. And the same story came from all of them. The man would come along from, rather like the man from Del Monte, the man from either Trafigura or Glencore would come along and assess the value of the dory. And on the basis of his assessment, two things would then happen. The dory would be shipped off to nobody knew where, and also the mining company got paid for it. So you've got three parties in this. You got the assessor, you got a bank, and you've also got the refiner. Now, in those days, and I think it's probably still generally true now, because refining silver, smelting it, refining and all the rest of it is a pretty, I suppose, environmentally unfriendly business. And it's quite energy intensive and so on and so forth. The Chinese were by far the cheapest and most ready refiners of silver. So all this dory was getting shipped over to China in order to be refined. So not only that, but China was something like the fifth largest mining nation for silver itself. So you can see that by taking on this role, it could quite easily accumulate all the silver that it would need to satisfy the monetary purposes which were intended in the original 1983 legislation. And I believe that's basically what has happened. So China has now got significant undeclared stocks of silver, and it will be, in terms of tonnage, considerably more than what they got in gold, obviously.
According to Macleod, the People's Bank of China, PBOC, was designated by the Central Communist Party in 1983 to oversee the acquisition and management of the state's gold and silver reserves. This move was part of China's broader strategy to strengthen its economic sovereignty and reduce reliance on foreign currencies, particularly the US dollar. In the early 1980s, China was undergoing significant economic reforms aimed at transitioning from a closed, centrally planned economy to a more open and market-oriented one. During this period, global gold markets experienced a prolonged bear phase, with Western nations actively suppressing gold prices to bolster confidence in fiat currencies. Macleod posits that China recognized this as an opportune moment to diversify its growing trade surpluses away from the US dollar. By centralizing gold and silver management under the PBOC, China aimed to reduce dependence on the US dollar by converting trade surpluses into tangible assets like gold and silver, enhance the nation's monetary stability by building substantial reserves, thereby providing a hedge against global economic uncertainties, position itself strategically in the global precious metals market, allowing for greater influence over pricing and supply dynamics. Macleod believes this endgame is very much still in play today, and when it's finally fully revealed, gold and silver prices will skyrocket wildly. Let's get back to the interview.
The parties involved with this were Glencore, mainly. The bank would have been JPMorgan, I guess. And the other thing, of course, is that as the silver dory was taken on board, then that needed to be hedged in the futures market. And this is why you had JPMorgan appearing in the market, selling futures the whole time. And as far as the silver bulls were concerned, thereby deliberately suppressing the price. But it wasn't deliberate suppression at all in that sense. It was just part of the whole thing. I think it was intended to hit the price because as far as China was concerned, they wanted to acquire their silver without driving the price up. So I have little doubt that the management of the price was part of this whole process. So are they still doing it? Well, I don't see any reason why they should be still doing it. There may be an argument that they would want to keep the price suppressed because they're a major manufacturer as a nation and exporter of photovoltaic cells and other electronic goods which rely on silver. But that edge is going a little bit. I mean, India's sort of muscling in on the act and all the rest of it. And I think that just controlling the silver price purely for that purpose doesn't actually make an awful lot of sense. So my feeling is that the days of that suppression have probably come to an end. And I would expect, therefore, to see the silver price be freed, if you like, from this sort of suppressive intervention by China. I don't think they're doing it anymore. Which is interesting because it could well mean that as gold continues to go higher, in other words, currency values continue to decline, on that basis I would expect silver's got quite a lot of catching up to do.
As Alasdair Macleod has outlined, China's decades-long strategy of silver accumulation through price suppression has had profound implications on global markets. Now, with the suppression seemingly coming to an end, we stand at the brink of a potential silver price explosion. If Macleod's analysis is correct, the silver market is about to experience a major shift, one that could redefine its value, impact global economies, and shake up the financial system as we know it. As market forces take control and silver prices realign with true supply and demand, those who understand the significance of this transition will be better positioned to benefit. The big question remains: how soon will this revaluation happen, and how high could silver go? If you found this analysis insightful, don't forget to like this video and subscribe to our channel for more deep dives into precious metals. Hit the notification bell so you never miss an update. We'd love to hear your thoughts. Do you think silver prices are about to skyrocket? Or do you believe suppression will continue? Drop a comment below and let's get the discussion going. Thank you for watching, and we'll see you in the next video.